What's up, guys? Austin the Money here. First things first, I just want to show you guys we have a countdown on Robinhood. Currently have 3 hours and 29 minutes until you get a New Year's reward. So if you do have a Robinhood account, make sure you are on this screen at the time that it counts down. You can't be here 30 seconds late or a minute late. You have to be. So I'd go ahead and get here like 30 seconds early. Make sure you're there. If you click terms apply, it's going to say you must have a crypto account. So it looks like Robinhood is going to give us some sort of cryptocurrency as a reward, which, I mean, it's free. If you want it, you want it. If you don't, you don't. I mean, it's hard to find free stuff in this world nowadays. So you have 30 days to claim it, and you must keep it in your Robinhood account for at least 1 year before you can sell it. So, I mean, it's free. You know, if you want it, you want it. If you don't, you don't. But you have 3.5 hours to make sure you're logged in here to claim it. Nothing too much. I got some Bitcoin just to make sure that, about $25, just to make sure I had a crypto account, because that's the catch. You have to have a crypto account, and then you're eligible for it as long as you show up on time. Nothing new too much. Still got my end phase. Down 10% total, but I still have $31.68 left to collect. And Micron, we actually got a dividend pending from them, which is kind of funny. But I've already made $265 on this premium, and I still have $168 left to collect. I may roll that a little more down because we're $11 out of the money right now. And Micron's looking kind of weak. Yeah, it's looking a little weak, so I might roll that one down maybe on the second or so. But yeah, we have $11.50. Freaking, dividend. That's pretty sweet. I'm not a dividend collector, but, you know, money's money. But yeah, guys, so total, still the same stock, still the same options. Got a little Bitcoin just to make sure I had a crypto account. And yeah, that's a little update. I know so for those of you who are new to investing or wanting to invest or any of this, I would probably be careful right now. We have been on an absolute rip since basically the first week of January of 2023. I mean, we went from 268 to 511. We've almost went up 50% in the last 2 years. All right. They said this is the biggest jump since 1998, the best 2-year stretch. And you know what happened after 1998? We had the dot-com bubble. Not saying that's going to happen, but I'm just saying if you are looking to invest, I definitely would not invest at the top. If I was you, I would probably wait, I don't know. I'd probably at least wait for the market to go down 10%. Once the QQQs or SPY went down 10%, I'd definitely jump in 20, 25% of what I wanted to invest. And if it went down 15%, I'd probably go, 65, 70%. And then if it dropped 20% or more, I'd deploy all my cash that I wanted to invest with. But a lot of these companies are trading near their all-time highs right now, and they're trading very rich. And what I mean by rich is their PE ratios. Like Tesla is a 114. That's absolutely nuts. 52-week low was $138, where it was trading at around a 30 PE ratio. Even the biggest companies like NVIDIA, which out of all of them, this is trading at a 54 PE ratio, but it is growing the fastest. So yeah, it's trading at a higher PE, but it's growing at an insane rate. So the PE is kind of justified. So honestly, NVIDIA is not too overpriced right now. I like it more in the 120 range, but still not a bad grab right now. Where's my Apple? There it is. Apple trading at a 41 PE ratio. Apple never trades at a 41 PE ratio, okay? This thing is usually always, I would say, usually about 28. And 28's kind of high for Apple, to be honest. But anything over 30 on Apple is too expensive. And we're at a 41 right now. So yes, we're on a bull run, but I mean, I feel like we're due for a decent little pullback, whether it be 5%, 10%, whatever. 41 PE ratio is kind of ridiculous on Apple. I don't think they're growing enough to justify that. Microsoft trading at a 35, and I think Microsoft's growing a little bit faster than Apple, so that's a better deal in my opinion. But yeah, look, they're growing. A good way to see if a company is growing, first off, you want to go look at their earnings and their balance sheet and all that. But if you just want a quick little estimate, if you look at Q2 fiscal year 2024, you can see they hit the solid red dot is right around that 2.94. Q2 2025, it's higher. It's at 314. So year over year growth on their EPS, it's expected at 323. So as long as they hit that or get really close to that, they're growing a decent amount year over year. That's about, 10% growth? Yeah, it's about 10% growth. I mean, that's like a little easy way to look at it, but I would definitely look into like their revenues and and other stuff like that. But yeah, a lot of these companies are just rich. Meta's 27. Meta's not terrible. Meta's pretty good. And they look like they're growing pretty nicely as well. Just off of first glance. Google's going through some lawsuits. Google's like the cheapest one here, but it's going through so many lawsuits. It's kind of like sketch. I don't think those lawsuits got settled yet. So, I don't know. Google's kind of a little on the table right now for me if I were to invest in Google. Amazon's a little bit rich right now, trading at a 47. Just a lot of these companies are rich. AMD's honestly at a pretty, I know it says 109, but it has not been this low in a long time. I mean, we were just at 230, 250? Well, that's not accurate. 52-week high is 227, and now we're at 120. That's fairly decent. I know AMD's having a lot of struggles because NVIDIA is just dominating the market right now. But AMD has potential. I feel like AMD has a lot of potential. But yeah, a lot of these companies are overvalued right now, especially Apple and Microsoft. I feel like those guys need to come down. And since those guys are the first and second biggest company in the stock market, that's going to bring the entire market down, right? Because if the S&P, I think like 7% of the S&P is just those two companies, or maybe close to 10%. That's ridiculous. I can actually look it up. Here, I'll look at the Qs real quick because I think... Look at that. That's nuts. If you look at Apple, NVIDIA, and Microsoft, that is, 25% of the NASDAQ is in three companies. And those are the three companies that are kind of overpriced right now. And Tesla, 4%. So, I mean, you're looking at a third of the NASDAQ is pretty overvalued right now, just based off of their top 10 holdings. So I definitely would not be surprised if we see a pullback, especially if earnings growth are not meeting the demands. I could see a lot of stocks crashing on earnings coming up, because right now we're super overvalued because we're betting on good earnings reports. So like good earnings reports are kind of valued in already on some of these companies. But if Apple misses or, another company misses, I would not be surprised if those stocks, fall 5% on earnings day. Because everyone's already betting in their, in their stuff. But yeah, guys, portfolio, not looking the best. But we are still playing the long game. We have 2 months? Yeah, we have about a little less than 2 months now for these covered calls. So even if Enphase expires exactly where it is today, we're going to collect the $31.68 when this expires. So that'll boost my account up $3,100, which should put me at $30K. As long as we expire exactly where we are or above, that would be fantastic. If Enphase tanks, I'm going to be in some trouble. Not going to sugarcoat it. I'm going to be in some trouble. But I'm looking forward for this trade to finally being over. Definitely hopping out at my $75 strike, and I'll definitely hop out at the 95 strike for Micron. I want to trade. I honestly would like to start wheeling probably like Nvidia or maybe even AMD, because AMD is looking pretty nice at this price level, and those stocks have decent premium as well. But yeah, I'm kind of I don't know. I'm just tired of looking at Enphase. I feel like it's kind of boring, to be honest. I haven't really played any calls lately. What did I do? Oh, I sold my TQQ call. I think last video I opened it for $475 and I closed it for $660. So we made $185 on this trade. That was awesome. I think I was up over like 340 at one point, but I couldn't close it because of the day trader thing. So, but yeah, guys, I'm just going to hold on to these shares and keep selling cover calls probably exactly at the strike price that I'm doing now. And it's just going to be a waiting game. You know, eventually these stocks are going to recover, hopefully sooner than later, but it's just a waiting game for me, honestly, at this point. But I am going to get into probably some more calls, like buying calls, buying puts, and some spreads. So if you guys want to see that, I'll definitely try to do some. I'll definitely post them after I do that. But if you want to see something like live or something, I can try to do that as well. I usually don't record like live trades just because some of the trades I just do kind of like in the heat of the moment, or I think about it and like, you know, it's like 3:58 and the market's about to close. So I just kind of knock it out real quick. But yeah, just let me know what you guys want to see with the account. I've been debating on just kind of cutting my losses with these, but I really don't want to do that. I want to stick to my plan. I want to keep doing what I'm doing. Basically, I'm just hope Enphase doesn't bomb earnings. That would absolutely suck. When does their earnings come out? Like February, I think. February 4th. I think they'll be all right. They're still growing nicely. They're expecting at 92 cents for the quarter, which is huge. I mean, one quarter, like let's just say if they came out with $1, that would put us at a 68 PE just from a quarter, not including the other 3 quarters. So if you add in the other 3 quarters, we're really trading at, let's see, what would we be trading at actually? So we got a little under 50, about 50, and then so $2, probably about $2.50. What you do, 68 divided by 2.5, you're looking at 34.20. You're looking at about, shit, what is that? 34 minus 17. About a 20 P ratio? Am I doing that right? 20, 25, something like that. Oh, shit. 27.2 PE ratio. So if Enphase comes out with 92 or slightly above, we're looking at a 27 PE ratio, which I think is pretty good for this company who's about to start rebounding from rate cuts. I know the rate cuts are definitely happening slower than they expected, but if you check it out, even with rate cuts happening slower than they expected, their growth is already re-accelerating. I mean, Q1 was, about 30 cents, and we've already, in 4 quarters, we've tripled that. I think that's pretty good. They're definitely on the right road, and interest rates are getting cut slowly by slowly, and their growth should definitely pick back up. I definitely would not be surprised to see this stock over $100 again. Probably not over $300 anytime soon, but definitely back in this level. We were trading here for I think the whole year, really. Yeah, since December all the way to basically October. We were trading in this 100 to 130 range for almost the whole year, like 10 months. We were trading this range. I would not be surprised if we get back to this range, probably at least 100, that support level around $100. I would not be surprised if we break that in the next couple earnings calls. But I guess that's the whole video. I'm going to wrap it up. Don't forget, make sure to log in to the New Year's reward. Might be small, whatever. You know, it's free. Just enjoy free while you can. Free does not come around too often. But I'll see you guys in the next video. Peace.